Morning everyone, and welcome to today's trading analysis on the 2nd of July 2023. Apologies for not making a video for quite a while, I think 2 or 3 months. Things have been a bit wild on my side, but here we are. So I think first thing to look at once again is the longer term picture. You can see this is the Bitcoin chart all the way from the beginning. So you can see that the tapering off of this parabolic curve is happening. The first run of Bitcoin was all the way up, something like 25,000% from the low to the high. The second run was 8,000%, and now the last run, depending on where you take it from, was 1,600%. So you can clearly see that the upward momentum is slowing down. So this last little bit here looks like it can still go to about $100,000. But anyway, that is where we are. Once it's made a new high, you can see, and it's broken through, it never came back to retest the previous high. You can see there again, it broke through and it never came back to retest. Now, the last time around, you can see that we actually came back to retest this back high. So you can see there's a markedly slowing down of the Bitcoin momentum over time. So if we zoom in, you can see that this area was support at some point. We've broken through there and we come back to test it here. So we are certainly at this moment in time, we are sitting at a resistance area. So this could certainly form another pullback, and the price could form something like that and come back to retest these areas here, which was $12,000. That is certainly something that is still on the cards. I'm not one of those people that are telling you the low is in or we're going to $100,000 at the moment. But it does look like we are forming at this present moment higher lows and higher highs. So from that perspective, we probably should have a bullish bias. Going into the candle charts, you can see that although we've had this run up is also slowing down a little bit. And this is now getting into this resistance zone. And this whole area here has got quite a lot of overhead resistance. Absolutely, all the way from $32,000 to $35,000. So this is why we're kind of hitting it like a brick wall at the moment. And you can see making this marginally higher high with the divergence on the RSI. And on this weekly scale, this is forming a doji candle. This is not looking too super duper at the moment. So, maybe a pullback, something like that, just to sort of reset things a little bit before another attack, maybe break through this area here. But we don't know yet at this stage. XRP is looking a little bit better because it's forming this ascending triangle. I think the next attack here breaks through this resistance zone. The target for this could be all the way up to $1. So that's almost a 100% move at this point in time. The S&P has had an absolute phenomenal run, and I do think like a pullback for the S&P is quite likely. Something back to the 23.6% Fibonacci or the 21-week moving average, something like that, just to cool things down before further upside. I think the Dixie, you can actually see that since they started printing all that cash during the COVID drop in 2020, you can see from the top to the bottom, this is the Fibonacci retracement. The price have actually reacted to the Fibonacci levels on the Dixie. You can see that right now we are sitting on the 61.8% support, and we'll have to see if this breaks. The Dixie would go down quite a bit, and then obviously if it holds, we should probably look at about 120. I don't think there's going to be any printing of money soon, and I do think there is a possibility of interest rate hikes, so we should just be careful, and that could potentially bring us back into a little bit of a pullback. If we look at the fear and greed index, you can see that every time we've gone above 60, between 60 and 70, there has been a pullback at some point. So we are reaching those levels where greed is now more than fear. That's something to take note of. We also look at the longs versus the shorts. If you go, you see that right now the funding rate is quite positive, which means that there are more people long than short. From that perspective, a long liquidation event is more likely than a short squeeze. All in all, I do think we are in a bullish environment. We are in a resistance zone, as you can clearly see here. So this is a very risky area. The rule of thumb is you sell at resistance, you buy at support. So for now, we are not at a support zone. This is something just to bear in mind. If you like this content, please like and subscribe, and let's see you on the next one.